Shares of Regeneron in the red today after the company announced it will buy global rights for a cancer drug from Sanofi for up to $1.1 billion. Meg Terrell joins us now for a CNBC exclusive interview with the CEO of Regeneron. Meg.
Mel, thanks so much. Dr. Len Schleifer, it's great to have you with us. Thanks for joining us this evening. Let's start right on the news of the day. Buying the rights to Libtayo, your cancer immunotherapy drug, the global rights from Sanofi. What will this enable you to do with your oncology franchise?
Right. So remember, and by the way, thanks for having us. Libtayo is a drug that was invented at Regeneron, and we originally licensed it to Sanofi in a collaboration where we shared the development expenses and the profits. And, you know, we've had a long relationship with Sanofi that's not quite 2 decades. It's produced, I think, one of the great biotech drugs in Dupixent, which was also discovered at Regeneron. But things change. We've been through maybe half a dozen teams at Sanofi, same vision and teams here at Regeneron. Their current team, Paul Hudson, John Reed, Bill Sibold, JB, these guys are super capable, but they have a slightly different vision than we had. We're going to be able, we believe that Libtayo is foundational to our immuno-oncology effort. We've got more than 20 different trials going with 18 different combinations. We think we want to play in a very large space, which is now the PD-1 space is north of $30 billion last year. And so we want to play in that space. We think we have the tools to do it. We had a slightly different vision, but we're going to be able to, we think, bring better drugs to patients with cancer.
So, yeah, I guess the question a lot of folks have is how significant a player do you envision Regeneron being in this space when, of course, there's the 800-pound gorilla of Keytruda dominating immunotherapy and potential biosimilars coming along at the end of this decade?
Yeah, if maybe I could steal a thought from Tiger Woods, who said he doesn't enter tournaments that he doesn't think he can win. We don't go into spaces that we don't think we can be the leading player at. That's our strategy. We went into the retinal diseases with Eylea. We were behind, but now we're the leading drug in that space, which is a very large area that patients truly benefit from Eylea. We entered into the immunology space for type 2 allergic diseases, and I think there's no doubt that Dupixent is leading. We feel the same way about immuno-oncology. We're a little bit behind some of the larger players, but we wouldn't enter it if we didn't think we could become a leader.
You know, I want to ask your thoughts also, Len, about this moment we're in biotech. We were just showing your stock price, and it has been a much happier story than for the rest of much of the biotech industry. The smaller companies are just at these horrible lows in terms of sentiment. Does that create a buying opportunity for you? How does that make you sort of think about M&A and the prices being where they are, if it changes your thinking at all?
Yeah, no, it does change our thinking. Biotech goes in cycles. We've been doing this as a public company since 1991, and we've seen many different cycles, times where you could mention the word biotech and the stocks would zoom, and times when you'd mention the word biotech and you were worth less than the cash you had in the bank and nobody believed you could do anything. We're in one of those down cycles right now. They change pretty rapidly, but we're in one of those down cycles where there's literally hundreds of companies that were formed that are trading at a very low valuation relative to the technology and creativity and innovative capabilities that many of them have. We recently acquired one like that, Checkmate, which we closed the deal on just literally in the last couple of days. And we think there are other opportunities. Regeneron, by its nature, tends not to compete with large pharmaceutical companies looking for late-stage products that are already have a ribbon tied around them where you can basically bring to bear, let's say, a marketing strength that a larger company might have. We're looking for like-minded companies. We've had relationships with companies like Alnylam, which is a great company in its space, with Intellia and many others, where we can find scientists who want to work together. But when the valuations come down, it's easier for us to do these deals, and we will continue to look. But we have a robust internal machine led by George Yancopoulos, which I think is really best in the industry.
Sure, Len. But how should investors, it's Melissa Lee at the NASDAQ, how should investors think about your portfolio and the areas in which you would want to invest? I mean, even after this deal, you've got about $12 billion in net cash on the balance sheet. And a lot of the analysts are saying, this is a great diversifying purchase for you from Sanofi, but at the same time, your core portfolio is Eylea and Dupixent, and they're facing increasing competitive pressures.
Yeah, it's funny, we've been hearing that from Eylea for a decade. I'm sure we'll hear that for another decade with Dupixent. Dupixent is in an upswing now, in a big growth mode. It's just an amazing drug, recently approved for eosinophilic esophagitis, doing great things for people who have really bad eczema, known as atopic dermatitis, for patients with asthma, for patients with nasal polyps, in all sorts of geographies, all sorts of age groups. Really an amazing product. So I think there's quite a lot of opportunity there, and there's room for competition. Competition is good for patients. Many people are bringing new ideas. We welcome that. It's the same way we're going to compete in the oncology space. We're not a leader there. And the others, I think, need to watch out, because I think Regeneron is coming. And we've got a lot of great things that look good to us. And so we're going to pursue them aggressively.
All right, Len Schleifer, thanks so much for being with us tonight.
Thank you, Meg.
Meg Terrell, thank you. And our thanks to Len Schleifer. What do you think of the stock, Tim?
Well, a couple things here. Regeneron is another one of these very healthy balance sheet stories in some part of the biotech space that's very different than other parts. It's 7% of the IBB, not the XBI, excuse me, which is the one that's really underperformed the XBI. If you think about this transaction, and I know Piper was out there with a note today saying that the sell-off around this deal was overdone. First of all, the full control of this underlying drug, the synergies in terms of their oncology aspirations, even if it's, again, an area where he just acknowledged they're behind. I mean, I think it's a case where this is a company that trades at around 14 times. And yes, only down 15% off of a crazy COVID high. But if you think about it, this is a company that clearly has a core pipeline that is defensible and a valuation that's not expensive. Yeah,
Karen, you were remarking on the moves in pharma today.
Yes, not in a good way. Yeah. Right. I mean, they've had a bad couple of days. You would think, so it's a hunt for where's the growth going to come. Mm-hmm. And also, it's been a place to hide, just as a market dynamic of it. And now we're in you don't need to hide anymore. Come out. So get out of your hidden stocks. I'm hanging on to mine. I think there's value there.
Which are?
Which are Pfizer, Bristol Myers, Merck, AbbVie, and Lilly.